Hello and welcome to the weekly wrap video. Just a couple of things to catch you up on from the past 5 trading sessions. We've finally seen the Fed QE taper, with the FOMC on Wednesday deciding to trim back their QE purchases by $10 billion, so evenly spread between treasuries and mortgage-backed securities, so down to $75 billion a month. Now there was the fear that this could prompt a sell-off in equity markets. However, this not being the case, as the E-mini S&P actually managed to rally after the initial dip lower post the FOMC reaction, as the Fed Chairman Bernanke assured and reassured markets there would be a gradual and non-aggressive taper. So the message that it is tapering and not tightening really reading through this week. However, we have seen 2013 lows in Treasury contract prices, with yields testing the 3% mark before retreating well ahead of Friday's close. To see a bit of volatility in the emerging markets, however not too much in the way of a sell-off as we did see in September, so some now thinking that this could be pretty well priced in for the Fed QE taper and maybe not as much of a problem for the US equity markets as some had foreseen. And as such, we're heading towards the festive period, with a number of market closures next week due to the Christmas Day and Boxing Day holidays. But elsewhere this week, just to round off the news flow, we did see the Bank of Japan rate decision, where they kept monetary policy unchanged, keeping their taps open on their quantitative easing program, reasserting their target of rising the money supply to 270 trillion yen over in Japan. But again, moving on to next week, we of course have the Christmas holidays, so likely to see some very muted trade in terms of news flow and volumes. But as always, we'll bring you any key releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic weekend.